SMB Investor with Nick Bryant and Sean Smith.
Hey everyone, this is Sean Smith, Managing Partner of Search Fund Ventures and founder of SMB Investor Network. Today I'm joined by Jon Staenberg. He's going to tell us all about early days of search, how he's been participating in the space, how he's seen it evolve, and where he thinks it's going from here. So Jon, thanks so much for joining us.
Great to be here, Sean.
Why didn't you give us a sense of when search was in its earlier days, how it looked, what kind of folks were participating in it, and how you were introduced in the first place?
Well, I guess I was there at the beginning. I didn't actually know that at the time, and nor did I pursue it at the time, nor did it have a name at the time. But back in the late 80s, I was at Stanford Business School where this idea and playbook was formed and grew. And it's the homage here is to Irv Grousbeck. For people that want to go deep on search funds, you'll come across his name. And he's an incredible human being and investor and mentor and all-around good person, which one of the attributes of the search fund space, in my mind, at least the traditional search fund space that came out of Stanford and Harvard, is there's a lot of really good people. And I like being around good people. That's a conscious decision in whatever, I love it when people say, follow your passion. Well, I would say, sure, follow your passion, but also find where the good people are. People that help you be a better person, that inspire you, that you can learn from, and that you can offer value to. And that was the beginning days of search. It started both at Harvard and Stanford, but Irv was at Stanford and backed some students who said, I'm going to go out and find a small business to buy. And there were a couple people in my class. Again, it didn't have a name. And of course, search funds, the meaning of that name has, I think, broadened and changed and has come to mean a lot of different things. But in the context of how I think about it, mostly, it's a microcap PE with a playbook. Said differently, it's students coming out of the best business schools who gather around themselves a group of very talented investors who are truly value added, who truly care about the searcher as well as the deal, as well as making money, and who in concert go out and find a company, $2 to $5 million generally, to buy and grow it and sell it to private equity. And that's the essence of it. Someone today said to me, I guess what you're doing is working with people who are fundamentally optimistic. And I think that's right, which I appreciate being around optimistic people. And in a world that feels increasingly divided and maybe even, I dare say, cynical, being around people who want to go out and buy a small business, run it, grow it, and take it to another level, and at the same time create a culture and pursue what I would call the American dream. And now the American dream can be done in all over the world if you're buying a small business, but who believe in that if you work hard and treat people right and follow the rules, that you can get ahead. And so all of that was true in the late 80s, and it's still true for the most part today. As you said, we'll talk about some of the changes, but fundamentally, mostly that's still there, even after some 40 plus years.
Well, that's awesome. And what a great compliment to the ecosystem in general. Being around great people, being around optimists. I mean, that's a space you want to be in, both as an investor and an operator. And I think the saying goes, something like, pessimists sound smart, but optimists get rich. So there's probably a third reason to be an optimist in there too, right? Why don't you tell us a little about kind of the fund you've put together, how you're kind of bringing, almost more of a macro portfolio-based, allocator-based approach to this sector, and just give the lay of the land on how you got to that strategy and what it's like.
Thanks, Sean. Yeah. So this is AHF, which depending on the person who asks and the energy I have left in any one day, is either always have fun or Agate Hound fund. Today we'll talk about fun for sure, but we'll talk about Agate Hound, which is the fund that I started. And the concept was really quite simple, and I would surprised to learn at the time, this was almost 9 years ago now, that no one had done it. And if you look at maturing asset classes, you realize that it happened everywhere else. It happened in venture funds, it happened in hedge funds, it happened in larger private equity. And what is it? It is a fund of funds. And fund of funds allows us to go out and find what we believe to be the best funds. We have a set of criteria to determine that, invest in them, and then get their underlying diversification and performance. And I guess it goes without saying, and access. And access is getting harder and harder. And I would argue that understanding how funds going forward adjust to what is a bit of a new normal is going to be increasingly important. But at the base level, let's step back. Our goal is to invest in somewhere around 7 to 9 funds, and each of those funds will have somewhere around 20 to 25 acquisitions each. So simple math suggests we'll be in a couple hundred companies that meet the criteria of the $2 to $5 million EBITDA and hopefully recurring revenue, run by these really smart people, surrounded by really deeply experienced former operator types who are their investors. And so I don't really like saying that we're an index fund or an ETF, but sometimes that helps people get a sense of how we're thinking about it. And this all came about when I said, I just looked at the world almost 10 years ago and said, where do I want to allocate my resources going forward? I'm a big believer in asset allocation, that one should not have all their eggs in one basket. So at the time, I had my real estate, I had my venture, I had my house, I had my public stock market. And I was thinking, I just don't know what's going to happen in the world. And if there was another asset class that had a long-term positive track record and had some kind of non-correlation, meaning if the stock market goes up or stock market goes down, it didn't seem to impact the asset class, that I would want to be in that too. And the now famous Stanford study that is an ongoing study is a great read for anybody who hasn't read it. I highly recommend it, along with the Stanford Primer on search funds. But the Stanford study demonstrates that you can have incredible results in this model. And it's not really an asset class, it's too small, but it's microcap PE with a playbook. And the numbers are kind of astonishing, 35% net annual returns for 40 years, according to the study. And who knows what they'll be going forward, but 40 years is a really compelling database sample set. So I continue to believe in the asset class or this model. And so I wanted access to it. And I've been to 21 search fund conferences from Booth, University of Chicago Business School, Harvard, Duke, Stanford, Michigan, et cetera, et cetera. And so I've gotten to know the funds, I've gotten to know the operators, I've gotten to know the investors, and I like spending my time there, and I still believe that it's going to be a lucrative asset class going forward. So that's how I did it. And quite frankly, at first, I thought I would do direct and avoid, I guess, what some people consider to be another layer. But I realized very quickly that I've actually run small companies, but I had never gone through the search, acquisition, running, and selling to private equity. And that the searchers who were coming out of these great business schools were better served, quite frankly. I think I have things to offer and board work, advisory work, and other ways, but I was not as compelling, and I say that with true humbleness, I was not as compelling to the people who were seeking their search fund investors. And so I just said, okay, well, if you can't beat them, join them. So I'll just invest in these great funds. And that's really how it came about. We are now doing more directs. I have built the relationships, and that will be part of our strategy going forward. But overall, the concept's I'm going to break it down. We've got this great 40-year history of returns. the number's high enough that if you do a fund-to-fund approach, you still end up with a number in the model that is still better than almost any other asset class, and you have this massive diversification. And that's what Agate Hound Fund is.
Very neat. Well, it's a great strategy, and there's really no one else I'm aware of that's doing it.
Yeah,
So
it's funny because I'll say I'm the only fund of funds, and people go, "Oh, that's not true." And they'll name the funds. I go, "Yeah, those who we invest in." So because Irv made only one mistake that I'm aware of, which was to name these things search funds, people get confused. You're a fund, and it's unfortunately, and people still call these search funds, and they're neither search like Google, which some people think about, nor are they funds like venture funds. They are really the first phase for some people who might not know is to just raise enough money to pay yourself a living wage, which is called the search fund phase, while you go out and seek to acquire, which is really the interesting part. And so we're investing in those funds that invest in the students who are out looking to acquire.
right. Yeah, and that's a really important distinction and goes nicely with kind of the conversation of where the ecosystem is headed because this traditional search fund concept, the Stanford study, that's a very specific and the original way of going about searching for and acquiring a small business that with the
Correct.
goal of, selling it to private equity, maybe a strategic buyer, something of that nature. But there's other models that have, grown in the space. There's the self-funded search and independent sponsors, which have been around for a long time, but they're gaining more coverage and they're getting lumped in with this self-funded search model, which as a whole is getting lumped into this search fund concept, which is really at its highest level a strategy to acquire a small business, right?
That's correct. That's correct. And even because the name has taken on these different models and kind of this broader meaning at business schools now, of course, they call it ETA or entrepreneurship through acquisition, right, which I think does a pretty descriptive job of describing what really people are out looking for. They want to be entrepreneurs. They maybe want to run things. There's this baby boomer demographic silver tsunami transition moment. And so there's lots of companies out there that are going to be sold or transitioned, or in some cases, maybe they shut their doors. But the opportunity set is so big and growing bigger by the week for the next few years that this is an especially interesting time. And of course, with the internet and with social media, no good idea seems to lay dormant without getting blasted out there. And so now we have more and more people saying, go out and buy a small business. But to your point, we're very, very focused on a certain size company and a certain methodology in approaching, buying, and running that company. Because what I think a lot of people don't appreciate is the people that we back are doing this full time. This is not a hobby. This is not a night at night. On Sunday, I'm going to just go through the listings and see if there's any. This is hardcore, full time, trying to find the right company, the right situation. And it's doing it with the knowledge that buying a small business is hard. It's messy. It's not like buying other things. And the more that you can take the risks and help supplement the ways to kind of counteract those risks, I think just by definition, the more likely you are to succeed. And we believe strongly in that approach. But like you said, the space of search funds is now evolving and changing, and new models are coming in. It's an exciting moment for sure. And I think we're pretty early in this thing. I mean, I remember doing venture decades ago when people said, venture, gosh, everybody knows about it now. And look at it today. I mean, it's still evolving and still changing and more money's coming in. And, it's not a fair apples to apples comparison completely, but we're early. We're really quite early in the rollout of this transition of small businesses to a new set of owners.
Yeah, and silver tsunami gets a lot of press. As you pointed out, just this career path or this opportunity of buying a business has started to get more and more press, not only on social media, it's getting coverage in, the New York Times. I think I saw you were on, what was it, CNBC or something like that, or,
Yeah, like imagine them covering this.
right. Yeah. So once you've made it onto CNBC or on Squawk Box or something like that, now everyone
Right.
knows about things, right? But just to kind of touch on some data we looked at recently. So we put together a report with some data from BVR Deal Stats, which are broker reported small business acquisitions, and the over the past 12 quarters, multiples peaked, not too surprisingly, in mid 2022 when rates were lower, and they've continued to trend down. And the most recent data we saw was a trailing 12-month EBITDA multiple of 3.3 times
Oh
EBITDA
gosh, John, that's
across
interesting. I haven't seen
50
that.
across 50 transactions. So
Just make sure your audience knows what that even means.
no, it's a great call. So just first on the data set, right? Business Valuation Resources, they used to publish a big guide, almost like a yellow pages style book. I believe they still publish it, but they now have a whole database, right, with brokers reporting transactions that have closed. And so we've aggregated a handful of those in each quarter, roughly 40 to 60 in each quarter. And the outcome is basically that the purchase price, so the price people are paying for these businesses, typically represented as a multiple of the earnings that the business is earning, like your price to earnings ratio in the public markets or something similar, has been trending down since 2022. So the reason I mentioned that, right, is, well, John and I are both seeing lots of publicity around buying businesses. The silver tsunami, the supply of businesses to buy, still appears to be growing and growing, and it's still, if there's any imbalance, it's still on kind of the supply side of the market. So I share that stat just to say, despite all the growth and the evolution, it does still seem to be a pretty attractive space to play. And I think, John, you're probably seeing some of the same things.
Yeah, and one of the great aspects of value creation here, there's a couple, as we know. One is what we call multiple arbitrage. So if you're able to buy a company at a 3.3, 4, 5 times EBITDA, and you can grow it to a size where private equity is interested, they're going to pay more. So maybe they want to pay 7 to 12 times. So just inherently, your number goes up because of that multiple expansion. And then you add to that a little bit of leverage, which helps create more value as long as you're outperforming the cost of leverage, right? And then you hopefully are creating organic growth by bringing in this new energy and smarts and maybe tech savviness, hint AI over time. And so you really have levers to pull to create value that results in a nice gain when you decide to transition to, say, a strategic or private equity.
Yep, that's exactly right. And those are, touching on your comment about the playbooks, right? You get kind of new operator who's, younger and has that kind of drive to get those value drivers in place. And, that alone can create a bunch of value for investors and for the company.
Well, it's funny, having done venture for so long, you're basically trying to take a company, which is the back of an envelope idea often, and trying to go from 0 to 100, right? And there's not often kind of any middle results. Whereas we're trying to take a profitable, proven product market fit and take it from, just for example purposes, take it from 30 to 40. It's already performing, and we just need to get it performing a little better. We don't have this binary set of outcomes generally. What we have is the ability to come into a company that's doing fine. The owner probably is in their 60s. The owner is making good money, has a couple homes maybe, and the boat and what have you. but doesn't have the same passion or energy or drive for the business, and you bring in a 30-something-year-old who wants to climb the mountain and it's their life, they're all in, well, that just brings a whole new set of really energy and new ways of thinking about it. But you do it in a way that you transition out, not overnight, but over time. And again, that's also part of this playbook that we're talking about.
Yeah. When we talked a little about kind of the various models of search and, deal by deal micro private equity that's evolving, whatever you kind of want to call the space, there are variations in those playbooks, right? In the traditional search world, it's very focused around the MBA programs, the academic
Yeah.
kind of
Yeah.
institutions. The self-funded search and these independent sponsors, their playbooks are gravitating a little more towards mid-career folks in many cases who have,
That's right.
led P&Ls, who've done this with a private equity-backed company and are kind of
That's
saying,
right.
hey, you know what? I know how to do this. It's time for me to do it myself, right?
Yeah, and I think there's merit in both. We just happen to be very focused on this one particular area because it's what I'm familiar with and my background. But even we are starting to say, move away from the search fund name and saying microcap PE and saying, a mid-career searcher, someone in their 40s, someone who actually has been a manager, someone who's run maybe parts of another company, someone who's had to hire, fire, live with their decisions. There's value in that. The trade-off is maybe they don't want to live in Topeka. Maybe they've already established themselves and the school system with their kids in whatever city, and they have less flexibility. So there's going to be these trade-offs, but both, I think, truly can have great outcomes. And I'm not here to tell you that mine is better. It's just something I believe in and the community I've gotten to know and continue to believe that the next decade should be great, but am open. And actually went to my first independent sponsor conference this year and went to Europe this year to look at what's happening there because they have the same demographic trends that we have. And so it's really a moment, and it's fun to be here as the whole thing feels like it's changing and forming and developing and growing. And I like being around where there's just generally positive momentum. I'm a big believer in the rising tide floats all boats, right? And while not everybody's going to win and not every model is going to be as good as each other, there's a lot of really good things going on right now. The fact that you're doing this is a perfect example. And we were together recently and the people we met there. And so it's bringing in a lot of great people and smart people and passionate people. And I like being around all of that too.
Well, that's for sure. There's a lot of great people that are already in the space and more coming into the space. You know, given all the conferences and all the folks you meet and kind of your high level perspective on the ecosystem in general, what excites you most other than kind of this silver tsunami,
Sure.
headline? What excites you most about where you believe things are headed?
Yeah, I have to say I did tech for a long time. So for me, I get almost giggly about the role of AI and the opportunity to come in and it's of course got two sides to the coin and there'll be some disruption and there'll be some challenges with it. But if we stay focused on your question and say, well, I'm buying a plumber and now all of a sudden I can use tech and AI to be better on my follow-up, to do scheduling, to be thoughtful about, I had an appointment and a year later, let's make sure we're reaching back out to them, learning what has happened in the last 100 appointments. How can we do that better? What about utilization of our resources, whether it's the trucks or the employees? It goes on and on and on. And so what that means to me is our opportunity to be a lean, mean fighting machine, to be more efficient, than the people who have been doing it still, believe it or not, with pencil and paper and fax machines. I mean, that'll be in 5 years, you'll say, really, you're still using Excel spreadsheets? I think that is really where we're going. And I'm personally excited about that. I use AI every single day to try and get smart about it and be comfortable with it and learn about its potential. And we are absolutely at the beginning of this. And the older people who have the existing companies are just less likely to want to engage with it, to feel comfortable engaging with it. And so, yes, I think that's going to be really an exciting moment. And that'll bring a bunch of players who, I mean, there are venture funds today who have now said, well, we're just going to go buy accounting firms and be an AI roll-up strategy. So that's an example of how our world's going to change because different players are entering now, and that'll be interesting. But again, you kind of made the point, but I just want to emphasize that the opportunity set is so darn big that I think it'll be a number of years before we feel like, oh my gosh, there's nothing left to buy because it was all bought up by AI forward venture funds or whatever, or even larger private equity funds. We're a long ways from that. So that's, you said, what gets me excited. It's this transition to that and being on the front line of people who are interested in being really thoughtful and smart about getting these companies ready to then hand over to those that maybe are taking it to another level.
Yeah, that's a great answer. And what we're seeing is certainly AI is sort of a North Star, using AI effectively and implementing it across systems to just drive a ton of value. But to your earlier point, right? If someone's on pen and paper, even if they're operating off spreadsheets, there's a lot of value in just, implementing something like a good CRM and good field service management software.
100%.
That just
right.
changes the game for a lot of these companies.
Well, when you realize that EBITDA and is so margin connected, and you can change the margins, it's just math. It's
Absolutely.
pretty simple.
Well,
It's pretty simple math.
Yeah, we had a gentleman named Brian Wolf on
Oh yeah, I
a
know Brian.
podcast
I
episode.
saw Brian at Harvard. Yeah.
Oh, great. Yeah, so he said something very similar to you, right? I asked him, what gets him most excited about the future of the space, and the way he framed it was, AI and software are going to improve the predictability of outcomes. I thought that was a really good way to kind of just frame it, because, if a lot of the risk is in these messy kind of, non-systematized areas, and the job of the buyer is really to, create accountability frameworks, set up systems, document everything. But now all you need is some really good AI tooling to do all that. You don't actually need to, monitor all these different layers of an organization. That's going to change the predictability of outcomes quite a bit. So I thought that was a good kind of parallel with what you said.
Well, and again, I earlier mentioned that I found buying small businesses hard and it's a messy process. I think not only will it change predictability of outcomes, it'll change the predictability of acquisition. And that also will lead to predictability of outcome, if that makes sense.
Yeah, you'll be able to, I think what if I'm understanding you correctly, you'll be able to understand kind of what you're buying a lot better.
And maybe walk away from things that you shouldn't have bought.
Right. That's right.
A number of times, generally speaking, pretty early in an acquisition if what you bought is what you thought you were buying. And you'd be surprised, well, you wouldn't, but maybe your listeners would be surprised at how often you get in and you're like, wait a minute, what?
Yeah.
That's not what I was told.
and there's usually, a few categories where you can sniff that out, right? A lot of times you'll hear it's in some of the more complex, financial concepts, some of the inventory management or the capital expenditure, asset quality, things like that. You hear people matters come up frequently. So if you go
Of
back
course.
to, how do you set up systems so that you're not as reliant on potential bad actors or things like that? AI can
That's right.
help a lot for things like that, right?
That's right.
So
So that part,
anyway,
I mean, to think about it, just not to beat the dead horse, but big companies have always had the resources to implement expensive internal systems.
yeah,
And now those same systems are not expensive and they're not as hard to implement.
that's right.
So you can have small businesses competing with larger competitors because they also have a tool set that allows them to play on an even playing field. I think that's really important.
That's a great takeaway for everyone. Thank you for saying it in such an eloquent way. Well, why don't we kind of end off here with any kind of, I would say, tips or suggestions you've developed in all the search deals, all this, search funds you've looked at. What kind of, top 3 tips for investors would you leave us with?
Well, I think this is, I'll be super transparent. If you haven't invested, and I'm not saying we're the only way to do it, but if you haven't invested in small businesses with some kind of diversification, then I think you might want to take a look at what's out there. And there's lots of different ways you can do it. If you are interested, there are a plethora, and that's the time we live in, podcasts and videos and books. If you want to geek out, I'm a bit of a geek, so that's kind of how I approach things. And the asset class is still small enough that if you want to connect with people, generally you can do it. I know in Seattle, where I am, there's a gentleman who he bought an arborist, and he decided he wanted to just create community around people looking to buy companies. And every month there's some 250 people invited to a meetup to talk about this stuff. So you might want to look in your city. It's no different if you were going to go and say, I want to do venture capital, or I want to start a tech company. You would take these steps. The more familiar you are with it, the more likely you will be to make progress and be successful. So I would say that's really number one. I'm very passionate about this asset class, of course, because the returns are great, but also because I really, in a weird way, maybe feel like this is the best of America. That I feel like making sure our small business, our middle class is strong and remains strong is important. Um, and and for me, I just read an article today on Warren Buffett. He's kind of my hero, and at 95, he's maybe going quiet a little bit, but he's still going to the office 5 times a week. And I'm going to do this until I can't, because I love it so much. And so, I guess I don't know if you're going to feel free to let people know how they can reach out to me, and I'm happy to send more links and other podcasts and suggestions. And I think that's the single best way to get involved. It's a lot of fun, and the people are really great in it. So that would be my suggestions.
Why don't you share your contact information here, and anyone who's
Sure, I
interested can.
appreciate that. So www.agatehound.fund, Agate, agate like the gem, hound like the dog, HOUND, .fund. And I'm just Jon, JON, at agatehound.fund.
Awesome. Well, Jon, thanks for joining us. This has been great. Some excellent outlook for the future of this space, and I appreciate you sharing your views. So
Yeah, Sean, I'm excited that you're in it, and look forward to sharing notes on a regular basis with you, and big believer in what you're doing as well.
thanks so much.
Thanks again.